Okay, let's jump sort of straight into it. Do a little bit of the sort of weekly review, and yeah, a bit of an idea of sort of what we might be able to sort of see for the sort of week coming up. So we are at what is that? 6:45 on 5th of May. So bit of an interesting sort of end to the week there. So I'll start off with DXY because obviously we had all that sort of news that sort of people were kind of looking for with this. I mean, throughout the week we had the big ones. We had the FOMC, which I mean, sort of held flat. I mean, that wasn't any sort of real sort of shocker there. Going back a little bit here, we can see there's sort of like massive drop down sort of throughout and really a bit of a bounce up. After that, this midway point that I've been going on about, like that obviously played its part coming into sort of Friday's session, as you can see, pretty much it's sort of like or start of the US sort of session Thursday night, and really just sort of dribble down, and then sort of coming into NFP on the Friday, really sort of hammered down. But the recovery is something that's a little bit interesting and sort of worth sort of probably paying a little bit of attention to, because obviously we're not seeing some of these meltdowns where we're sort of seeing a drop consolidate a little bit, and then continue to just complete meltdown. It actually sort of, I mean, at one stage here, it looks almost undid that whole sort of move. Obviously, sort of towards the last couple of hours of the week, it sort of chilled out and sort of consolidated down near those lows. But you know what I mean? It's not a full sort of conviction. And realistically, that NFP, although it was bad, so I mean that sell off of the USD, you know what I mean, and DXY is sort of seeing this here. Is pretty much expected. It wasn't like a full sort of shock. It's certainly not as bad as we've had a couple of times recently. I think it was no, last month was revised to 315,000. Expectation was already a drop down to 238 and came in at 175. So look, it is a bit of a sort of drop off in that, but you're looking 60,000 under. And certainly if you look back at a couple of the history of the last couple of months of that, we've had shockers by, over 100,000, to be sort of revised up almost 100,000 the next month anyway. But beside that, this is probably why we didn't see a complete sort of like continuation of the meltdown. We saw, textbook response to it all, sold off, but obviously then sort of bounced and rallied back up to it all. But, as we've sort of been saying sort of throughout the week, this is on the one, I've put this onto the daily. This is an area that we had marked out. We knew that these are the previous highs here, and as it was going to come through here, we were going to see a little bit of a bounce up here. But again, if you look at this on a daily sort of candle there, that's really, it would have wanted to hold 105.40. And the fact that it has seen a little bit of a correction rally up here, I don't think is really too much to sort of worry about. I still think that 104 is pretty much our sort of short-term target for DXY, sort of moving forward on that. And that'll sort of take us back to the level where they had their sort of CPI. Sort of as you can see, this sort of big push off from here was the start of April. But really, I think the fact that it's given up and actually closed significantly down underneath this main trend, I think sort of this is just really a matter of people were waiting for the drop. They got the drop, closed a couple of shorts. There was ISM data out afterwards, which was also negative for US dollar. So that's another sort of thing that sort of kind of rallied it up a bit. Actually, so now as I look at this, we've got final services PMI was above, but then you've got what's rated as a sort of medium or medium tier news, and then you've got the high tier news ISM services, the PMI, and that was well down. That was expected to be a little bit higher at 52 and came in at 40, just under 50, so 49.4. So I would say really just end of the week jitters, and I think that's really just sort of a bit of a bounce up here. Maybe you see a little bit of a continuation early through Monday session, Monday Asia, but I would say anything that moves up here really is just going to be hammered into, and I'm going to be targeting, as I think a lot of the market's going to be targeting, this 104 area as the next stop for DXY. As to sort of what happens there, well, you've got to sort of wait and see, and obviously sort of see what the ECB do, to sort of push those things on. We've got BOE this week, which doesn't really tend to affect DXY a great deal. We've got RBA this week, which won't have any effect on it pretty much whatsoever as well. But things to keep in mind is sort of the probably sort of larger news events. In terms of sort of US data, though, it's pretty quiet for the week. So I think that certainly the fact that it gave up this horizontal, gave up this flag, like it was another failed flag here. We had this rising support, which really has been setting up since the lows start of March here. Start of March, yeah. So start of March, we hit those lows there, and it's really sort of come back up here and it's given way on that. So a little bit of consolidation, but mainly looking to sell into any sort of short-term dollar rally efforts moving forward through here. If we sort of flip across to gold, gold really is, it's still just churning sideways. Like, I mean, you can see it wants to break down, but it's still being elevated. So, as you can see with these zones here, I had the sort of buyers pegged at around this 2295, 2290 level, that sort of $5 range. But pretty much now I'm going to sort of be moving this a little bit lower down. Like, to me, that's become a little bit obsolete. They've allowed it to go under, close under, and obviously reject it and sort of like reversed it back up a couple of times. So I think, again, this is the line that I'm looking for. It did clip this line, but of course you can see the reaction afterwards, and that sort of shot back up. So this is on the 4 hour, and it's actually interesting. If you get down onto the 1 hour, you can probably see it a little bit better here. And metals, silver was the same with this as well. It had this very strong, which is expected, reaction to NFP on the Friday, where it sort of flew right up the top over here. I mean, this sort of moved just off the news. What's that? This is gold. Oh, I was thinking of silver. Silver was exactly the same, but gold went 298 to 23.20. So it's a $22 punch up to the top side, and then it dropped from the top there. Do the thing. It then proceeded to drop $42. So, obviously the bigger move there was for if anybody sort of shorted into that and tried to fade that one. I certainly wasn't about to do that. I actually sort of closed all my gold, all my silver on that pop, and also a good whack of Aussie as well. But certainly the fact that it sort of bounced back up here, we are seeing a little bit of what I guess you could say is a descending triangle. But to me, it's not really. I mean, again, if you get the close down under here, close down underneath, you probably don't even need to go that deep with it all. I would say pretty much underneath this zone. If you get a close 2280 and below, I think that's going to be enough to sort of signify that these buying pressures here. So you got buyers here, you got buyers here, you got buyers here. As soon as we see that these buyers are obsolete, that for me is okay. Yep, we're going to move down towards this 2220 area. So it's interesting to sort of say at the moment, but as you can see, as a whole, it came back down here, swept back up as we sort of thought, came down, and then it's just holding this area here. So I think sort of moving forward, sort of really, this is your range that you want to see above. Like, it's a fairly decent range. You can always sort of trade the range with these things. That sort of stuff, where's this going? So this would be your sort of little consolidation area through here. So make this, where are we at? Big old box. So that gives you pretty much, I mean, it's a fairly chunky size range, and obviously you can trade the range, as I said, but you got a 2284, 2327. That'll be your initial range here. If you break above that, look up towards the 50, I think could probably play the part here. I wouldn't pay too much attention to this sort of midway range. I think this one could really just sort of be, just a little bit of fluff to sort of like churn around here. But at the moment, you can see it's pretty much like it's just pretty much given up to going sideways. Like, a bigger range would be, of course, this sort of 50 area and still this baseline through this slot over here. But certainly trades to be done over here. If you push up along here, the reason that I sort of isolated 2320 and not the higher 2350 is because this would technically be your swing high. It'd give you out of this. Well, it's not really a sort of a channel here because there's nothing to base this bottom side on, but certainly through this falling resistance, and then that would take out your swing high. So above 2320 was where I would be sort of like looking to call this as a bit of a move to go back up the top. Again, I still don't see any sort of real catalyst or reason for why we may sort of be hitting new highs or anything like this. I think sort of, it's whatever does get up over here is eventually going to be sold into to sort of come back down over here. But, if we see sort of that continual sell down of DXY, so US dollar across the board, and we make that move towards 104, that money's got to go somewhere. So, maybe going into equities, but I would say a chunk of that as well is probably going to be sort of pumping back in to give gold another run to sort of see if we can sort of really pump things up a little bit higher. So for me at the moment, I'll be probably looking for any sort of dips this week on metals. And certainly if we can get above this kind of almost sort of take this out, maybe drop it a little bit lower here. I think maybe that might be somewhere. 2003 has really sort of played its part, but they're the little zones that I'd be looking for. And if we can get outside this range, so above, back above, say 2310, I'll be looking for any sort of little deep pullbacks, or sorry, not deep pullbacks, but I'll be looking for any sort of pullbacks to add to long positions, targeting these levels, that sort of 2326. If we get above that, be targeting that sort of 2350. You get above that, then targeting this sort of falling resistance over here. If you get above that, well, you know, you're going back up towards that sort of 2400 level. But obviously there's some big levels to get through here. We saw that particularly in this range here, and this is why I would say this is going to be difficult, is because you can see how much back and forth there's been through here. You're going to see a lot of replication of this as price goes to move back up. I don't think we're going to see one of these smooth, like sort of carving moves that go down through it all. I think once we get up here, it's going to be a hard fought battle because a lot of the people are still in profit, yes, but they're like happy to go, look, I missed my chance to exit with a decent sort of profit. So here it is, it's come back up to that level. Bang, I'm done. Maybe they've been in from way down lower. You know, they've got a lot on the table. They just want to squeeze out that last little bit. So I think that's definitely going to make it tough for metals to sort of move up quite strongly and sharply. I don't think we're going to get a straight cut through. I think it's going to be a churn. But overall, I do think we've got some short to medium term strength in metals, which will be gold and silver, sort of coming through the sort of start of the week. Flip on to Aussie. Aussie hammered. What a trade, man! This is this was actually probably one of my better trades than that more recently, which is good because you know, I mean, it's been a bit of a dicey sort of one, but as you can see off that news, the NFP really just exploded it to the top side. We came into that higher time frame resistance, which you know, as you can see here, we marked it out, and this is the thing that I say every time, you know. You just look previously, where has the market tried to sell it from recently? And yes, it's a fairly biggish range here. What do I have? 26 up to you know, 62. So yeah, it's a 40-point range. But as you can see, a number of times it's got up here, market has gone bang. Yes, I'm happy to sell it, and that's what they did going into the close of the week. So look, I don't think there's anything too much to worry about. I think if it closed on the highs, it would probably have more of a chance of a reversal. I think really all this is just a little bit of a known area where people would be closing. They've taken their profits. You know, it's coming into the end of the week. We've just had a big, massive run. I mean, this came up from, you know, what's that, from 40 here. So even that's 100 and 180 points ever since Wednesday's lows. So, you know, that's nearly 3% move in, you know, 2, 3 sessions. So there's no doubt that you're going to see people taking profit in these areas, which are known areas for sellers. So I think certainly it's something to watch here because as you can see, I've got my alerts. I've moved them up to the top side here. I actually closed a bulk of my Aussies up coming into this kind of thing. So I've been sort of hammering it the last couple of weeks with Aussie ever since the Iran lows. But yeah, I would like to sort of see it pop out the top side here. But as I said, this is a pretty heavy sort of resistance area. It's the bottom of this, top of this sort of little medium term range that we've really been playing with for most of the year. So there is a chance that, you know, it just stuffs around and takes a little while to sort of get through here. But certainly something to watch. One interesting one is if you put it on the weekly. How about this one or maybe? And one. This is something I sort of picked out sort of throughout the week. And as you can see here, this is on weekly with the Aussie. You can see this kind of areas that Aussie loves to do these little fake out moves. I mean, this could have been a little bit higher here, but you know, for me, I just had it on those wicks. And as you can see, this is going back over a year actually now, but this is sort of mid last year and is coming down off those highs. Support, closed underneath. A lot of the market gets short. What do? Rip it up to the top side. And as you can see with this one here, This was a 7% move from the lows of that sort of fake out move. Again, sort of last coming into the last quarter of last year, as you can see, this is around October. Support, support, support through this area through here. Closed down underneath, so went down underneath, shot back up, came out. As you can see, this is just topped out anybody there. Closed down underneath. This one took a little while longer, like another 2 weeks, but as you can see, it popped out. This was a 61% retracement and then flew off to the top side. This one sort of moving nearly 10% from the lows in the last quarter of last year, which of course, we've seen a big sort of sell back down here. And then if we sort of look at where did that actually take us eventually here? So we had a pretty deep, yeah, look, I mean, past the 78% retracement through this year, clipped out a whole bunch of people. This is a known area of support that we've seen sort of, as I said, coming into the end of last quarter of last year, fired back up, and the weekly has really sort of brought it back to life. So as I said, you can see with the weekly, it kind of hit and it's rejected where it has a couple of times time again. If we can get, and this is forward thinking, but if we can get a close in, above say 66.50, I think this is going to really sort of come up on the radar of a lot of traders, because you've got the RSIs, like it's crossed over and it's coming back out of oversold. You've got this potential sort of reversal from a fake out move where they can squeeze Aussie shorts very hard. And as you can see, these moves are generally, this one came very quickly. This one sort of had that little stuff up around, but realistically over about, course of 3 months or so, came through here. They don't give it up quickly and they can move quite a lot. So even if we sort of say went the same move as, the lesser of these two squeezes, you're still bringing back up, into a sort of pretty much a known sell area, 68 cents plus. So look, I mean, it's probably Aussie's been very weak for a while and still ultimately is sideways, but even in a range, you've got your ups and downs, of course. If we get a close above 66.50, if we take out last week's high, like this wick high, for me, that's a sort of confirmation we should pretty much just churn and cruise back up. And I would say at least this would be a fair level to be calling for your price target, which, as you can see, kind of lines up with the same as that first move down here. And then you got to start to think, well, is this a big inverted head and shoulders? Excuse me. As we know, Aussie does love inverted heads and shoulders, and this is a very, very much forward-thinking sort of move, but that would be a measured move for the inverted head and shoulders. And if you go back and you watch my videos from from last year, we were coming down into this little wedge down the bottom over here. So we'd sort of dropped from 69 cents basically down to below 63 cents. And I said, look, here's the measured move. The measured move price target for this wedge that was playing out through here took us right back up to above 68. And at the time, it was like, this is the pie in the sky sort of forward-thinking price target. And you know what? It hit it. And I did very well through that in that period. So these things aren't, not plausible, not plausible options, because really, if we see a major sell-off on US dollar, if we see, the Fed start to really sort of talk more cuts, if we see a weakening in US dollar data, or US data, sorry, you're going to see the US fanboys disappear a little bit. We're going to see a sell-off of that. And now really the talk with the RBA is about sort of raising rates. The talk of sort of cutting rates is really off the cards in Australia. So if you've got the scenario where you've got the Fed are cutting, you've got RBA on an extreme end potentially raising 3 times, this is the scenario where we get the big breakout. Because they're going to be sort of going, well, where's the return? Where am I going to get a better sort of a better rate? And you're going to see it obviously in the Aussie, and that's what's going to sort of give the right sort of fundamental setup for us to get a big breakout here. And you got to think, if you've been coming through here, this is back in June last year, how much liquidity and how many stops would be set up and are going to continue to be set up above 69 cents? there's going to be a lot of the market that's sort of going, oh, well, you know what, as long as it stays under 69, I'll keep shorting it, I'll keep selling it. US is going to be okay, it's going to recover. But if it goes above that, well, that's just going to add to the liquidity and we're really going to fire up. I mean, look, there's a lot of levels for them to hit and to get through. I mean, if you even just sort of drag these up, we know sellers are here, we know sellers are here, and then if we get up here, well, we know sellers are definitely up around this level. But that top level there is really starting to look pretty similar to where this measured move would be coming out from a big sort of inverted. This is your neckline, your shoulder, neckline, shoulder, and now we're in the bottom of the right shoulder, ready to sort of squeeze. So I still think we've got upside here. So certainly I'll be adding to positions if we get above 66.60 this week. That means we're taking out that sort of last week's wick high. We've got the RSI set to support us to keep sort of churning up. And we've got to remember this is on a weekly, so it's not going to be happening next week or 2 weeks from now. But it's something to sort of certainly keep in mind, because if you're trading above this level here, we can see how much congestion this has had through this pretty much the whole of this year. After that solid sell down, you know, there's going to be stops around here. Then they're going to be targeting those next lots up there. And if we see a continued sell down of US dollar, well, Aussie's definitely going to sort of benefit quite strong from it. So anyway, that's a bit of sort of forward thinking with the Aussie. In terms of the here and now, as to sort of what we're going to be looking for, I think this little sell down here is really fine. There's like, you know what I mean, end of the week, people taking profit. As I said, we were coming up into that higher time frame sort of resistance. Where are we at here? Flicking back between the two charts. There we go. So yes, coming back up into that higher area. New sellers are there. People take profits end of the week. That's fine. Let it sort of chill out a little bit. We have the RSI rolling over a little bit on the 4 hour here. I would say again, any sort of maybe sort of drop down here. Maybe you could get back underneath 66, really sort of test it out. But if we come back to 66, we're touching that sort of 4-week lows. I think that we're going to see a bit of a move up to the top side here. I think realistically, the fact that it didn't give up much of that move after the after NFP is very telling that the market's happy to sort of see how high they can push this one. And if we see US dollar go toward that 104 in the short term, that should give Aussie the strength it needs, probably at least to sort of get out the top here to say, I would say this little congestion zone that we saw on the way down, which is basically here. There's a little resistance. 77.20, 77.30. I reckon that'd be an area in which would be quite interesting, provided that we can sort of take out this 66.60 area. It's not too far off. It gives you about a 60-point range. We can see there's a lot of congestion going through here, sort of on the way down. So that would be the first target there. And then, you know, from there, you got to sort of see what's happening, see what they do. I mean, realistically, we've got the RBA on Tuesday. Look, I don't like to work in absolutes, but I reckon they're not quite there to hike yet. Cuts are definitely off the table for the moment, which again, this is opposite to the Fed. But I would say sort of they're going to give at least one more wait and see approach to sort of see what they do. But of course, we've got the press conferences now, so we've followed suit with the US and the Fed. And so now we're actually going to start to see a little bit more of an insight as to sort of what the Fed are really sort of thinking. Sorry, what the Fed are thinking, what the RBA are thinking, sort of just after the rate decision. So I think, again, that's going to be the big mover, where we're going to sort of see them with a little bit more of a hawkish tone, which will sort of help sort of strengthen up the Aussie. So if we see a little bit of a dip down early into Asia on the start of the week, I think that's fine. Nothing too much to worry about. I'll be looking to add some more longs. First target, obviously, retest Friday's highs. And then I think sort of realistically, we could probably be seeing a bit of a push out. So I'm tipping more upside for Aussie this week, and I'll be trading that as well. Flip across, we've got copper. Just quickly go through these ones here. As I said, copper likes to sort of break these trends and suck some people in. But, you know, this is why you have a sort of a bunch of different charts that you work off. And we've got this sort of horizontal that we knew that they were going to be sort of holding. Well, we sort of knew we were going to be holding, had a pretty good idea, and also called the idea that we were going to be holding this. Yet to sort of see this RSI support anything to show that this is a full strength move. It could just be a little bit of a reaction, but it really seemed very unfazed by that little push up by DXY into the close of the week there as well. There was no sort of little stuffing around, and as you can see, really closed on its highs. It got a little bit of a push where was that? The data was around here. Got a bit of a push, but closed on the highs coming into this little resistance area. I think if you see an early push on copper, we're going to see a retest of the highs at 470. I don't think we're necessarily about to sort of go through there, but again, as I said, if US dollar sells off, I think that's going to be sort of seeing a little bit more of a strengthening with one and a bit of a strengthening with copper. So I still maintain the top side price target of 485 moving forward, provided, of course, we get across that 470 line, 469 line, where we sort of saw the highs from, when was it, last week or so? Yeah, a week or so ago. And finally, just speaking of that, with the yuan, it's absolutely hammering down, which is, this has just been a great sort of trade to the downside here. This is the range we isolated, we called it, and it sort of said that basically once we saw this little area give up, and this is a great sort of indication of how these ranges work, little close down underneath, one last little breath, couldn't get above the break candle, and it just dropped down like a stone. Saw a little bit of a bounce back up into the close of last week. I did extend this previous resistance out, so I did have this sitting down here, and it does look like it lines up. I'm not a big one for carrying through these moves so much like this. I don't think this was like some really super significant setup area, and now we're seeing the back test to see the breakout of it all. To me, it's just more, look, it's an overshoot of this horizontal, and we saw a little bit of a correction with US dollar across the board coming into the close of last week. So I don't think this is really like a tester thing, and now we've found the super buying support. We go all the way back up here. I think if anything, we come back down here, we fall back into this sort of lower range, and it goes back to sleep in its little grind for a little while. As I said, the bigger move I'm looking for with the yuan is break to the downside, this large head and shoulders that I've been sort of playing basically since October last year. I think this is a good setup at the moment. We're really looking like we want to come down hard into it. If we jump it onto the higher time frames, so this is on the daily, not a great deal to sort of add to it all there. Weekly, weekly was a significant drop off here, and as you can see, where it found its support through here, and that's what I was saying, look, there was that little bit of a falling resistance, topside support, but for me, this is the horizontal that sort of played the effect. We know the buyers have had a shot here, and this is that 720 level that they gave up, flew to the top, and obviously there's just no follow through here. So that's quite a sort of bearish looking weekly candle, obviously, and also we've got the RSI looking like it wants to go a little bit further. So this is why I sort of think maybe grab a little bit of liquidity early in the week. Certainly be looking for a break and take out of that sort of wick low. If that wick low goes, then we're coming back down, and that's going to be the major test into this little weekly support area here. This is the one that, if you're sort of US dollar yuan long, you'd want to be holding this one here, because this is setting up very nicely for a head and shoulders with a measured move down at 690. You got the RSI to support it, and as I keep saying, if we see US dollar sell off across the board, if we go down to 104, that's a good catalyst and a good reason that you could see the one sort of come back over here to test this 712 area. You break 104 on the one, then I think definitely we're going to be seeing some strong downside. The last time that we were down at these levels, US dollar, well, DXY, I'm aware one is a part of it, but just for comparison, the US dollar was around 101 at these areas. Is at 104 at the moment. So it means that it's got a lot further to fall. If it's to get back to 101 again, it's going to be down over here. It gets sub 100, we're going to be going way down, well into the sort of 690s, I would say, with the one. So something to sort of keep an eye on and keep in the back of your mind as well, because the stronger that the one is, Aussie, it's a good proxy for risk. It's a good proxy for Aussie dollar as well, Aussie dollar strength. So it's certainly one to keep an eye on. Anyway, that's about it for me for this week.